Hi guys, my name is Arthur, owner of SNG Bookkeeping. We are an e-commerce accounting and bookkeeping firm. And today we're going to be going over Shopify capital loans and how to account for them inside of QuickBooks Online. So real quick, why should you listen to us? Well, my partner and I, Daniel, we've been doing e-commerce bookkeeping for about 6 to 7 months with real clients. And we've also been in the accounting classroom for multiple years. So we get to apply that knowledge that we learn in the classroom and our actual client work to these videos and to potential clients as well. So the reason that we're making this video today is because Shopify capital loans are a little bit more complex when it comes to their accounting. The way they work is basically Shopify would loan you out a certain amount of money. Let's use simple numbers just to make the math easy here. But let's say they loan you out $10,000 at 10% interest. Typically, when you have a loan, you pay interest on a time period. So maybe every month, every quarter, typically not quarter, every month or year, depending on the terms in the loan. But Shopify actually has a flat fee. So 10% of $10,000 is $1,000, obviously. So that $1,000 would just be a flat fee that you don't have to pay every single month, year, and so on. It's just once you pay off that $1,000, you're good to go. And this is actually beneficial for business owners, this specific type of loan, because Shopify actually takes payments out of your Shopify payments payout. So if that didn't confuse you, uh, so basically, for example, if you get $500 worth of sales in one day, instead of paying you $500, Shopify might pay you 90% of that, so $450, and take the other remaining 50, apply it against your interest and the actual loan that you have to pay back. So it can help small business owners who might not have the money right away to pay off interest. So you basically pay as you go. So the way that we've done it for our clients, and after doing some research, this seems like it's the right way as well, because like I mentioned, typically when you have interest, there's some sort of time component, but there's no time component here. You basically pay as you go. So that $1,000 interest expense in this case from our $10,000 loan, that's more of a broker fee, you could call it. We're not going to call it that just for simplicity, but it's basically the fee that you're paying Shopify in order to loan out some of their money. And what we've done with our clients is you actually take that $1,000, and anytime you have a payment against that loan, you add up the first few payments, however many payments it takes, up to $1,000 as your interest expense. And then the remaining payments are categorized as paying down the actual loan that you owe. So let me actually pull up QuickBooks Online to make this a little bit more simple. So this is one of our clients and their books inside of QuickBooks Online. Don't worry, we're gonna have everything blurred out. But these are the bank feeds. If you go to the left, transactions and bank transactions, you'll see the bank feeds right here. Now they actually have Shopify Balance set up, which is basically a bank account within Shopify. And the reason I like this is because obviously it's by Shopify, so it only has Shopify transactions. So if you go down here, you have Shopify payments payout. Those are the normal payouts that merchants would receive. Shopify capital repayment. And then they also have a sales tax account where they transfer sales tax that they collect from their clients into a separate account to help when they remit. They know exactly how much money they have to basically send to other states once that tax filing is due. We'll definitely make a video about that in the future as well. Mostly these three accounts right here, the payments payout, capital repayment, and then the sales tax transfer. So first things first that you got to do is actually recognize that you even received the payment, that loan from Shopify. So let's say in this case, instead of 500 or $10,000 example, we can categorize it from Shopify and capital loan. I already made these accounts to prepare, but we can just classify it as Shopify capital loan right there under short-term business loans. And then you could add that there. And that'll recognize the fact that we received that $10,000, but we also increase our liability, meaning we have to pay that back later. If you're not sure how to make those accounts, you can go to the chart of accounts, like that Shopify capital loan, for example. You press new, Shopify capital loan, expenses, or sorry, not expenses, current liabilities, loan payable. Make this a sub account. You can make it sub account. We already made an account called short-term business loan, so you can do that and then press save. But we already did that, so we're not going to do that. If you guys want to do this ahead of time, we also made an account called Shopify capital loan interest to recognize our interest expense on that. That'll just be an expense interest paid, perfect. And then the parent account can be, we made one as well, interest paid. And as you can see, we already have that. So we're not going to save it, but you can if you want. And then now if we go back to bank transactions, now that we recognize that $10,000 in our bank account, whatever bank account you had, whether you're linking an account like the Shopify balance, obviously these transactions can occur in any bank account, whether you have the balance, Shopify checking, savings, and so on. Like I mentioned, I do like this one because it's primarily for Shopify transactions. But if you don't have a linked account, you can upload from a CSV, an Excel file that you download from your bank account. So now that we have those payments coming in and out, like I mentioned, we're going to recognize that expense, that $1,000 expense first, and then recognize payments off on that loan. So from Shopify, what you're going to want to do is interest, Shopify capital loan interest. Then you could add that right there, $70.93 payment for interest. And basically, you're going to keep on going up until you hit that $1,000 interest that we talked about. So anytime you see a negative, unless obviously it's a sales tax transfer, make sure to read the memo, Shopify capital repayment. You're also going to categorize this as interest. But when do you stop? When do you actually stop paying for that? When do you know when to transition from interest to actually paying off the loan? Report for the most up-to-date numbers. We'll see Shopify capital loan interest of $10,070.93. Obviously, that's $70.93 higher than our $1,000 interest expense that we should have had. So we'll go up to the top left, press plus new. Journal entry. And let's just $70.93. $70.93. Perfect. Okay. So what we want to do is basically reduce that expense by crediting it. Shopify capital loan interest. So if we put this number here under credits, it's going to reduce that loan interest by the $70.93. And basically, we want to take that $70.93, take it from the interest expense account, and then move it to the liability account, since that $70 should have actually been going against our loan instead of to interest. So let's call it Shopify capital loan. Perfect. Now we can save and close. Now, if you run the report, we'll see it should be exactly $1,000. There it is, Shopify capital loan interest, $1,000. And once you fit that $1,000 mark, what you can start doing is actually, anytime you see any of these repayments, Shopify capital repayments, Shopify is fine. And we actually have short-term business loan right here from a rule that we set up. If you haven't set the rules up, I'll show you in a second. But all you would have to do is manually just type that in, Shopify capital loan, add that. Now if we go here and we click on that expense that we just made for the loan repayment, we can see that the transaction journal will be a credit to our Shopify balance account or whatever bank account you're using to pay that off, $71, and then debit our short-term loan, which is exactly what we want. We want to reduce the balance that we owe since we're making those payments. So that's good to see. But now, especially in the Shopify balance account where all of these transactions are for Shopify, what I like to do is make a bunch of rules and obviously look at your Shopify account or your bank statement to make sure that these descriptions in QuickBooks Online match up with the rules of what's actually going on in the bank statement. So you want to make sure that these Shopify capital repayments and these payouts, for example, are exactly that same number as they show up on your bank statements as well. So just, I like to do that. I'm an accountant, so I like to be accurate with all my numbers just to make sure it's 99% chance it's fine like this if you make the rules. But I do like to make sure. So in terms of rules, what we can do here, since we know those transactions are going to be pretty repetitive and pretty consistent, we have our Shopify capital, let's see what this name is, repayment. So I already made a rule, but these rules basically help you categorize transactions much faster than if you had to do it manually. If you haven't done one yet, you can press new rule right there and then type in all this info, but I already made one. So we can press edit, Shopify capital repayment, money out from this account. Now, the rules can be a little funky with the description, so I was a little basic just to make sure, because when I had Shopify capital repayment here in the description, it wasn't showing up. But now that I changed it to Shopify, there are 26 unreviewed transactions that will have this rule applied to them. So once you do that, you can assign an expense to pay off that capital loan from Shopify and press save. And you could do that as well for any payouts. So if you have your Shopify payments payout, you can deposit it wherever. Typically, there's a Shopify clearing account that it comes from. So it would take it from the clearing account to whatever bank account you have. You can select that specific bank account. If it comes to various bank accounts, select which ones those payouts come to. If it's only one, then select one. In this case, we only have one. So you can make rules for all of that. There should also be a rule for the sales tax transfer, I believe. Shopify balance, sales tax transfer. Let's see that rule. Shopify balance, sales tax transfer. Yeah, from this bank account. Test the rule, 21 unreviewed transactions. And it's basically a transfer from your balance account or whatever bank account you're using to the Shopify sales tax balance, which not every business has, but it's something that some of our clients have. So makes it a lot easier to track how much you've collected for sales tax. But that's a topic for another video. So I hope this helps you guys out in terms of accounting for your Shopify capital loan in QuickBooks Online. Please let us know if you have any comments or questions in the comment section below, and we'll get back to you as soon as possible. So thank you for watching again. We appreciate it. Bye from S&G Bookkeeping.